Hello, I'm Malissa Fritz, host of It Takes a Co-op from CHS. Farmers and ranchers are no strangers to volatility and the cyclical nature of agriculture, although it seems we are experiencing more uncertainty today than ever before. I'm joined today by Ken Zuckerberg with CHS Market Advisors. He will help us examine what's driving volatility in agriculture and how farmers can manage risk. Hello, Ken. Good to see you.
Nice seeing you too, Melissa.
I have been so excited for this conversation and want your help to understand kind of what's going on in this world. But first, share a little bit about yourself, your background, and your role here at CHS.
Wonderful. My role is I have the privilege and the pleasure to lead the CHS research team, which is now part of CHS Market Advisors. Market Advisors is a regulated commodity trade advisor that provides macroeconomic, commodity research, and also consulting services to various CHS business units and external clients. So I joined the company in November of 2023, so just a year and a half ago, after spending about a decade in ag research at CoBank and Rabobank. Before that, 25 years of institutional investment management, as well as independent research and consulting. During those days, I focused on global financial institutions, industrial companies, and technology companies. Now, while I'm not a farm kid, Melissa, I live in that part of New Jersey called the Saddle River Valley that the Dutch settled in the 1700s. And there's still some farms out there today.
Awesome. Well, I'll be the farm kid. You be the expert here. Let's get down into it.
Excellent.
I've been looking forward to this conversation for quite some time. There is so much happening in the world right now. But let's start with a macro perspective. Let's talk a little bit about that U.S. economy and what we are seeing, again, from that higher level perspective.
So the economy is undergoing transition. Last year, GDP grew by 2.8%, and that was above the long-term average at 2.6%. In beginning the year, we and others believed that the economy would slow, and slow it has.
Indeed, yeah.
In the first quarter, we saw actually a contraction in U.S. GDP by minus 0.3%, and the estimates now, looking at the full year, are somewhere in the range of 1.5% to 2%. There are several drivers here, but the overarching theme is volatility, uncertainty, complexity, and ambiguity. VUCA. Yeah. You got it. Yeah. Good guess. They call that, they use that term in the military to describe situations and environments that are very uncertain. What's the driver of the VUCA? Well, we have a lot of changes to policy, trade, and also a slowdown in the mainstream economy after several very good years. So the bottom line is, as we sit here today in late May, the general economy is still performing pretty well, but the outlook has risk and uncertainty.
Yeah. So the first thing when you're talking of VUCA world, volatile, ambiguity, what risks are out there? And what are you watching on the horizon?
So there's 5 risks on our watch list. Persistent inflation is one. Second is the risk of a secondary spike in inflation. So inflation staying at a high level and then a spike. Third is labor market uncertainty. Fourth is Federal Reserve policy uncertainty. And the fifth one is bond market volatility. On the Federal Reserve, I think it's worth mentioning that the Fed usually starts lowering interest rates when the economy slows. The challenge is with the risk of inflation going up with tariff policy. The Fed is sort of in a quandary. How can it lower policy interest rates if inflation is increasing? It will, sort of put its mandate upside down.
So as you think about volatility, uncertainty, what are the specific signs that you watch for to be able to know that that's happening?
Maybe proof points for what can we prove? Where is volatility? How can we measure it? Melissa, there's 3 signs. First is stock market volatility. Thus far in 2025, the market has gained or lost 2%, probably 35 or 36 trading days, and that's 36% of the time. Last year, it was only 18% of the time that you saw such moves. Next is the CBOE Volatility Index, the so-called VIX, or the Fear Index. When the VIX goes above 20, it's a sign that investors are fearful about the environment. It's a key psychological level. More than 44 times, or about 45% of the trading days this year, the VIX has been 20 or higher. It was only 10% last year. So that's another indication. And then finally, the bond market. Bonds are the safe haven, so-called, the less risky and safer asset class. Bond market yields have been all over the place. So the question is why? Most recently, we had a treasury bond auction where the government rolls over its debt and refunds to investors. Investors didn't show up fully on that. This happened soon after Moody's downgraded America's AAA rating by a notch. So these are some of the key indicators of volatility and uncertainty in the capital markets.
So the farmer side of me is dying to jump into agriculture. So let's turn our focus over there. As you think about the ag industry and the grain sector, what are the forces that are at play right now?
The first force is the cycle. As you know, ag is a difficult business, oftentimes 2 or 3 good years followed by 4 or 5 not so good years.
Cyclical market.
Cyclical markets. Yep. And we are in year 3 of the negative crop cycle. So farm income peaked in 2022, and grain prices in many cases are below the break-even costs for the average American farmer. Now, the forces that are driving this profitability beyond the grain prices are, continued. We talked about inflation. So fertilizer prices are steady to increasing. Energy prices have come down, but financing costs have increased. Labor costs have increased. And of course, that equipment out there on the farm field has not come down in price, at least the newer stuff.
Yeah, and I feel that. Whether we raise livestock, and my farm friends that are out there on the farming crops, they're seeing that. So you talked about 5-ish years. So talk to me about what the next few years look like. Are we still going to be seeing some challenging times?
In the next few years, crop farming profits will be under pressure, in our opinion. The good news is this too shall eventually pass, and in prior cycles, you've seen the more resilient and innovative farmers and co-ops rise up and be better for it. But in the near term, what we are thinking about is what happened the last time around. So the last cycle, profits peaked in 2013, and then we saw some very predictable behaviors by the farmer. The American farmer stopped buying equipment. They delayed or skipped fertilizer applications. Then they began switching to cheaper inputs, specifically conventional seed, generic chemicals, et cetera. That particular set of behaviors seemed to go from about 2014 to 2017, 2018. And after a period of still below average profits, the cycle eventually turned in 2020. And that coincided with China buying a lot of U.S. grain as part of the previous trade deal.
So that's what farmers did back then when we saw this similar cycle. What do you think farmers should be thinking about right now as we're in this time?
So in any commodity business, it's very important to understand that winning has to do with being the low-cost operator and having flawless execution. So whether it's a farmer or a cooperative, we think about first understanding your cost of goods sold and operating again as a low-cost operator. In challenging times, there's often opportunities. So the opportunity to reinvent your business model to be closer to your customer is something else that comes to mind. Now, the farmer customer is different than the cooperative customer. So I think one of the things I see at CHS that we're doing is being a lot more thoughtful about who we serve, how we serve, adding value at the customer level. So I think there's a combination of offense and defense, but clearly being present and focusing on operational excellence is clearly a strategy to win in this environment.
So Ken, knowing we're in this VUCA world, how is a farmer to respond?
Well, the best way to make profits is to buy low and sell high, just like in the investing business. How do you do that, though? You really have to hedge your risk to the downside when there's price volatility, and not be afraid to lock in profits on the upside. You can do that through hedging. You can do that through expert merchandising. It's certainly one of the things that we spend a lot of time at CHS Market Advisors talking to people about.
I appreciate a gentleman that thinks glass half full inside even challenging times. So thank you for that. Let's do focus on those opportunities and what we see as bright spots in agriculture as we wrap up our time together. So what are some of those bright spots that you see out there?
So if we look beyond the current environment, all the headlines related to trade and other policies, let's look beyond that and think about what are the opportunities for U.S. crop farming 5, 10, 20 years from now. So there's really two of them. So in the short to intermediate term, ethanol is still a winning product for the American farmer. Ethanol exports hit an all-time high in 2024, and there's no reason why that should not continue. We have low-cost corn, which is negative from the standpoint of, are you getting value in realizing the farm gate price? However, lower input costs, lower corn costs allows ethanol to be very competitive on the world stage. I would also point out that the recent resolutions of the Canadian and Great Britain trade deals are very positive for ethanol. Canada's our largest market for U.S. ethanol exports, and Great Britain has committed to buying ethanol as well. So there is a strong story there. And again, that's on the biofuel side. On the core grain side, Melissa, as you know, we've done some research over the past 6 to 9 months looking at markets other than our traditional export markets of China. And what we found is that there are probably 5 to 10 markets that are new manufacturing economies that are showing both high levels of GDP growth, economic growth, and high levels of GDP per capita, or the wealthiness of the individual. So when you think about individuals getting richer, changing their diets to more protein-oriented, animal protein and higher value-added ag products, food products, we see a tremendous opportunity over time for the U.S. to export more grain and feed to markets that are experiencing that manufacturing-led economic growth. So we think there's a very strong story there long term.
That's exciting. Thank you for your time today. I appreciate the willingness to demystify a little bit of what we're seeing happen out there in the world, understand what it could mean for us. And I think it's also safe to say that being a part of a cooperative provides us opportunities that we might not see alone that we can now do together. It takes a co-op. So truly, thank you for your time, Ken. I really appreciate it. Any last thoughts?
Don't go it alone. Manage risk prudently and effectively. And you do that by partnering with an organization that adds value to your business every day.
Just like the CHS Market Advisors.
Just like CHS.
Awesome. Thank you for your time today, Ken.